Bitcoin is currently at a crucial level, and in today's video I will be giving you guys two different trade ideas alongside some very educational info about a valid market structure break and a fake market structure break. What we can see over here for Bitcoin is that I've mapped out the range low area over here already, that I've mapped out the range high area over here already, and that I've also been mapping out the mid-range level over here. Now what we can see is that last week Bitcoin broke down out of this range. What we are currently seeing is that Bitcoin is retesting that entire range low area over here. Now this is a pivotal level, because the retest over here, in my opinion, will decide whether we are looking at a potential big deviation below the range low, or whether we are looking at a potential valid breakdown below the range low, a bearish retest, and then continuation towards the downside. Now let's discuss the first scenario in which we are looking at a potential deviation. Now if we want to look at a potential deviation, then what is very important first of all is to analyze the market structure. Now when I analyze this market structure to the downside, I can see that at some point we form a low over here, then we form a lower high, a lower low, lower high, lower low, which means that the last lower high, the brothers to that lowest low over here, right, it's the high right here, right? This is the significant high to break. If we break through this high, we are shifting structure back towards the upside, and in my opinion there's a higher probability of a potential deviation that can be confirmed over here, a reclaim, and then seek higher targets for the Bitcoin price. Now important is to analyze the fact that this is the significant high. This is the educational part that I was talking about. Many people, instead of using this high, they would use this high to call it the valid break of structure. Now let me quickly explain what I mean by this. If I quickly go to a blind chart over here, what we can see is that if we have an uptrend like this, right, people often see this for a valid break of structure, or they see this for a valid break of structure. Now these, in my opinion, are not valid break of structures. I call them fake break of structures. They're basically a continuation of the trend, but they're not a shift of the trend. If we want to look at a shift of the trend, then we need to make sure that in order to shift the trend back towards the upside, that the price needs to break through a significant high. Now when does a high become significant? If the high brings us to a lower low compared to the low that brought us to that high. If the trend wants to shift to the downside, so if we want to get a valid break of structure to the downside, we need to break through a significant low. When is it a significant low? If the low brings us to a higher high compared to the high that brought us to that low. Now if we want to look at it on the chart that way, that would mean that in this case, if we want to say that this is a valid break of structure, this is not a significant high, so it's still a fake break of structure. Why is it not a significant high? Because this high did not bring us to a new low compared to this higher low that brought us to this higher high compared to this high that brought us to this low, right? A lot of information. But let's say that this high over here, right, let's remove this for a second. Let's say that we form a higher high, then this higher high brings us to a lower low. Now all of a sudden, because the high over here brings us to a lower low compared to this low that brought us to that high, the high all of a sudden becomes significant to break. And if in that case we break through that high, then we are looking at a valid break of structure. So the first thing that we have to analyze is the fact that we always need to mark out significant highs and significant lows to figure out whether or not we are looking at a valid break of structure at all. The second thing that we have to notice is that we always want to see a candle open and a candle close above the significant high. So a wick above the high is not enough, a candle close above the high is not enough. If the trend over here, for example, is visible on the 4-hourly time frame, you want to see a push above that high, and then you want to open and close a candle above that high on the 4-hourly time frame to look at a valid break of structure. So don't get trapped into fake break of structures. Identify the significant high, identify the significant low, wait for the candle open and close above that significant high or below that significant low to look at a valid break of structure. Now when we translate this onto the Bitcoin chart, we can see that we need a candle open and a candle close above this high over here. If we get that candle open and candle close, then I think there's a higher probability of a potential deviation below the range low to be confirmed. Does it mean that if in that case we are still trading over here, that I'm looking to open up a long with my invalidation over here, and targeting range highs? No. What I would be waiting for is still a stronger reclaim back inside of the range. If in that case we are going to retest the blue box, I will be letting in limit orders, and a third limit order for a potential sweep below the blue box, invalidation over here, and as a target range high. So in practice, that would look something like this, in which we are going to get a push above, retest, first entry for example, at the top of the blue box, invalidation beneath this low, and as a target, a brand new all-time high for Bitcoin, which aligns with the range high level. And now that, guys, offers a beautiful RR of exactly 2.12, and that is exactly the kind of RR that you want to look for these kind of swing trades. This is definitely a swing trade that I'm looking to take. Now there's also a bear scenario in case we don't get this break of structure, which should send us maybe even below $50,000. Now let's look at a potential trade execution for the potential short idea. That short idea is super simple. It would mean that we are going to reject off of this range low area and that we are going to swing fill this significant high over here. So instead of opening and closing a candle above that high, we fail to open and close a candle above that high, but instead we reject over here, and low time frame wise we get a valid break of structure to the downside. Now if that's the case, then I will be looking for a potential short idea. For now, the significant low to break is this low all the way over here, because this is the low that brought us to this higher high over here, compared to this high that brought us to this higher low, right? So this is the significant low to break, since it brought us to that higher high. All right, let's say that Bitcoin is, for example, now going to sweep the high one more time. Then in that case, we form a higher high, and all of a sudden, this becomes a significant low to break, because that's the low that brought us to a higher high compared to the high that brought us to that higher low. So let's say, push up, sweep the high, reject, momentum to the downside, break of structure, play the lower high, and then we target new lows for Bitcoin. We can target this low, we can target this low, and then eventually higher time frame wise, guys, we can even target a low of this previous consolidation phase right over here, and that is a big draw in liquidity in that case as well. And then I'll be looking for swing longs after we take out that higher time frame draw in liquidity. So important is for that short trigger to understand two things. We cannot see a candle open and a candle close above that high over here. That would invalidate my bias for potential shorts. But if we swing fail it alongside either a break of structure by pushing beneath this low and opening and closing a candle beneath this low, then I'll be looking to play the lower high. Or second scenario is that we're going to form a higher high, sweep the high, form a lower low, break structure, open and close the candle beneath this low, and then I'll be looking to trade the breakdown over here with my invalidation above that high, and as a target, a new low for Bitcoin.